So yeah, let's get to know our panel. So first we have Hilary Palmer, who is a Senior Vice President Team Leader at Marsh, Canada. Next up, we have Neal Jardine, who works at Box Insurance. He is the Global Cyber Risk Intelligence and Claims Director. And lastly, a coworker from TELUS, Kim Schreader, who is the Director of Cybersecurity Professional Services at TELUS. And I am your moderator, Morgan Smith. I also work at TELUS. I'm a Senior Strat Manager, and I'm kind of in charge of the studies that we've been producing. So hopefully some of you are familiar with ransomware, cloud security, and unsurprisingly, this year's study will be about cyber insurance. So since that's the case, it's probably not surprising it's going to serve as a bit of a foundation for this discussion with the panel today. So the study's not out yet, but to tell you a little bit about it and set the stage, we surveyed over 500 Canadian organizations across Canada of various sizes, representing, I think, a dozen verticals, because we really wanted to get to know about what was their experience with cyber insurance. Do they have it? Do they have reservations? Have they used it? How easy is it to renew? But we don't capture in there is the perspective of the insurance provider. So this is a really great opportunity to get that perspective, get to understand what do you wish your claims holders or organizations knew, how do you choose the things that you say are mandatory or required, and really kind of dig into that perspective as much as we can. So with that, let's get started. So the study data, because we do have some of it available already, it suggests that on average organizations are experiencing 3 cyber incidents per year. And in this case, an incident is a successful attack. So this would be a question for all of you. Does that sound right? Too high? Too low? What are your thoughts?
Yeah, so we certainly do see a high frequency for clients. Obviously, we're an insurance company, so it's kind of like asking a cop if they see crime happening. But I remind myself that I deal with it day in and day out. When we look at the stats, though, it's around 3 to 4% of our clients will experience some sort of cyber event every year, right? So we set up a 1-800 phone us when there's a problem, and that's about what our calls are. Now, some of those can be super small and some of them can be large, right? But definitely 3+ events is probably pretty accurate depending on the size of the market. The SMEs will experience, exploding size businesses will experience more of like a phishing attack, so we'll see lots of phishing events and so on. So I always compare those to somebody knocking on the door of the house and trying to get in. Whereas larger organizations will generally experience something more targeted. They're going after them, they'll craft the emails and so on. But yeah, I'd say 3%, three instances a year is probably pretty reasonable. One thing that always blows my mind is our clients who do experience a successful, from the point of view of the hacker, cyber event will generally experience a second one in 6 months if they don't improve their security. We actually have one client who went through a business email compromise. They managed to change the invoicing details on it, just as so the client sent an invoice to their client for $320,000. The hacker was in the email. They immediately resent that email and said, "Oops, there was the wrong payment details on that invoice. Please update your payment information and send it here." The client of the insured sent $320,000 to the wrong party. Of course, they discovered it when 3 or 4 weeks had gone by, and they were wondering why the client hadn't paid for the item they bought. So what happened is the client said, "Oh yeah, we should implement a bunch of security controls," and their IT department said, "Great, let's build a roadmap for how we're going to do that." So they spent they spent at least 6 months, because just a couple weeks ago they phoned me and they had the exact same attack happen again. But fortunately, the IT guys had a clear roadmap as to how they were going to stop it. They just hadn't quite executed yet. So what we're seeing is definitely repeated events for ones that have been successful, because now you're on the hacker's radar, so to say.
Yeah, I think I would echo what Neal says, and just to clarify, I'm the insurance broker, not the insurer. So we see it from the client's perspective. What we do see is increased frequency. We have our data shows that there's been an increased frequency in the number of claims the last number of months. Additionally, to kind of echo Neal's point again, it does depend on the severity. So the severity is what I think shifts a little bit, and that could shift the data in terms of whether or not it would trigger the policy, because if it's under the retention, then obviously it's not going to trigger reimbursement. But we're definitely seeing an increase, and our insurer partners have the same data as well. Yeah.
the definition that it could be one small thing that gets compromised, like one computer, one person's computer, and it gets isolated quickly. 3 sounds reasonable. But I definitely think in general, we see it trending. Like I think I saw a stat somewhere that said healthcare, for instance, has seen 103% just in 2024. So we're definitely seeing a lot more threats, and so it would make sense that they are seeing more, the same customers are seeing more and more frequently, and once they are seen as somebody that they were able to compromise one time, that makes sense, they're gonna go and see if you fix that or not.
Yeah, of course. Hilary, given this volume of incidents, how are you seeing customers thinking about cyber insurance? How are they strategizing around it?
Yeah, it's a great question. So I would say when companies or our clients come to us and they're trying to decide whether to buy cyber insurance, it's really a multiple factor decision. There's a lot of things that go into it. But if I could break it down into a few critical components, one of them, and probably one of the key pieces, would be the perception of cyber preparedness that the organization has. So whether or not they feel that they can respond to a cyber incident and manage it themselves. One of the components of a cyber policy that's probably could be deemed one of the best or one of the most valuable components of a policy would be the breach response services. So that would give clients expert assistance in handling the event, as well as being able to pay for out-of-pocket expenses. And that's one of the things that a lot of clients, large and small, really find valuable. So once they determine, their cyber preparedness, the other factor that goes into that is stakeholder involvement within the decision process. Because we find that specifically with the cyber policy, there's a lot that has to go into, getting the placement done. And you have to pull in a lot of different people from the organization. So it's really effective if you have the senior level involvement. But on the flip side, once you get senior level involvement, that does mean that there's more data required, which actually is a really great thing. So what we help our clients do is quantify what a loss is going to cost.
Right.
So once they understand what a loss might cost their organization, they can then determine if they want to transfer that through insurance or if they want to self-insure, and how that's going to impact their organization. So those are really the key things, but that's just a little flavor.
Yeah. There's so much more. Sure.
Yeah, I'm certainly just going to say I agree with that. Like we're seeing clients who are choosing that maybe after their first event to self-insure a bit. So a deductible is just really self-insuring. You're saying I'm going to insure myself for the first 10,000 or 5,000. We have some clients that say I'm going to insure for the first 100,000 because we think we've knocked off all the low-hanging fruit. So if we're going to have a cyber event, it's going to be a big one. So we don't need to insure for 50 grand. We need to insure for $1 million. So that's how we're really seeing it changes. Is we're seeing more brokers say, well, listen, I want to increase my deductible in order to better control the premium, and my client's going to accept the risk because the really small ones, they're going to work with their provider or their IT provider, their in-house IT provider and stuff along the way.
Maybe it's a question for both of you, Neal and Hilary. The study shows that the kind of the leading way that insurers are assessing organizations is through the application process, which often includes a long questionnaire. How has that process changed over the last few years? Where do you see it heading maybe in the future?
I'll take a stab first, and then I'll let Neal add in. But basically, so what I've seen, I think we kind of almost have to take a step back before we answer that question. So like initially, when cyber insurance policies were placed, there wasn't really a lot of data that was required. And then fast forward to 2020, when we had all that influx of ransomware claims, that's when insurers and the cyber insurance market actually really started to understand what was required to understand the exposure. And that led to a lot more questions. So a lot of our clients that, their comment is that it's a lot of work to get that cyber insurance placement done because of the application process. But what we always like to say is that it's actually, I like to think of it as a way to differentiate yourself from your peers, because it does show the controls that are in place. And that's how insurers can understand how to underwrite the
or buy cyber. You had like a cyber exposure because you're part of a supply chain, right? Like cyber insurance really started in, I think it was the 1980s pretty much was around the first time. And then I think it was early 2000s when online kind of real threats came along. And that's when they started doing cyber insurance for that. But really, if you look at cyber insurance, when did the masses start buying it? Probably around maybe 2012 to 2016. I got into it in 2016. And back then, if you owned a computer, you could buy a cyber policy with a $5 million limit for super cheap. And people were just selling them because there was a bunch of players in the market. There was tons of capacity or additional money to pay the losses. So the applications are really short and people are giving out high limits and such. And then in 2020, a lot of them got burnt because ransomware took off. Like ransomware as a service came out. I was just telling a guy yesterday, I feel like all the hacker groups merged together into like the Walmart of hacker groups, right? All these independent folks were all operating and they got together and were like, we should commoditize this. Anyways, so that happened in 2020. And so insurers hit this massive loss ratio where they're paying out $4 for every dollar they took in. And so the following year, you saw the applications change. Like it went from these, very high level, do you have a firewall? Do you have a plan if something happens? Do you have a complex password? Right? Like if somebody told me that was the underwriting application nowadays, I'd say that you might as well not ask because the password doesn't matter. It's more do you have MFA, right? So, but nowadays what's happened is we see the applications where it's like, if you're under 25 million in revenue, here's one application. If you're over 25 to say 100 million in revenue, here's another 100 million up to $1 billion type thing. And it gets longer, more complex along the way because rightfully so as you get bigger, right? The only part to that makes it difficult is, I was having a discussion with someone, if you're a car dealership, right? You have $1 billion in revenue, but really you just sell 10 things, right? So it's a bit different there. But the point is the smaller folks, their questions are limited, right? It's like, do you have MFA? Do you have, do you have MDR, EDR in place, managed detection and response, so on? Do you have backups, right? And then the last ones, which we generally look to a lot towards, is patching, right? Do you patch? Patching drives me bonkers because it's like flashing on your screen, update, and you don't. And then I think the top three vulnerabilities that were used last year against our clients were more than a year old. So for a year, somebody said, well, I can't update that. Well, then ring fence it, right? Make sure it's not exposed to the outside world. So anyways, that's how the application changed. They started out, basically no application. Now we've got different applications depending on level. I think there's a discussion at 4:30 which goes into more in depth, so I don't want to go too far instead of thunder, but it was a great chat at 4:30 around applications.
Can David add in terms of, I know as part of the professional services, sometimes we are helping organizations get ready to apply or to reapply. What are you seeing them struggle with the most?
I think the change. So they think they're going to be ready for renewal because they were successful last time, but the threat landscape has changed. They've expected the application to be the same. And because it's not standardized across all insurance companies, so I think that's one of the challenges sometimes we see with clients when they're asking us, like, help me qualify or help me get ready, is that they maybe have not prepared as much when they're getting into the renewal phase to realize that they weren't going to be compliant with the questionnaire that year. So then trying to see, do they have it in place? Are they going to have to put something else in place? Do they need to get a new partner involved? So I think those are some of the challenges that we see when we're supporting customers through that process.
Neal, maybe I'll turn to you for this one. The survey respondents share that the top 3 reservations they have about cyber insurance are high premiums, lack of incident response flexibility, and claims not being paid out. So as an insurer, what would you say to these poor organizations who have these? What's your perspective, essentially?
So as a claims guy, do you deny claims? Got it. Okay. So high premiums came out of, like I said, 2020 when we saw all these losses happen and insurers increased the premium to try to make it so that it's balanced. Then last year, the year before last year, what we saw was insurers were collecting about what they needed to pay the losses. And then last year, we actually saw a bit of a dip in losses. And so insurers this year have said, okay, I'm either going to flatline my premium or I'm actually going to drop it a little bit to try to make up for it. So people's kind of apprehension around premium increases is, it's right. Everyone saw huge increases in 2020. People are kind of feeling the headache of that and going, am I going to experience that again? I feel like the cyber insurance market's at a place where it's leveled off. And I think that's, number one, we're collecting the right amount of premium, but two, the controls are in place, right? So, we now ask, do you have a backup? And is that backup stored separately and securely from the original backup, right? It used to be, do you have a backup, right? People will be like, yeah, I have a backup. It's a USB stick in the side of my server. That's not really a backup. It's just an external drive that's going to get encrypted along at the same time. Sorry, now what was the middle part of that?
The middle
Yeah.
lack of incident response flexibility.
Okay, lack of incident response flexibility. This is one that always gets to me. So insurance companies work with vendors for a reason. We deal with the same vendors every single day and stuff. And so when clients experience a cyber attack, we're not there to take over from their IT provider or their MSP or whoever it is. We don't want to take over. That's not our role. Our role is to figure out what happened. And we need to do that using an independent person who has no skin in the game, because if you get sued or you go to court or something happens, I need to be able to turn and say, that person has no skin in the game, they've done an investigation. It's kind of like they had a fire and you said, well, the sprinkler installer knows the sprinkler really well, so I'm going to get him to investigate why it didn't go off during the fire. You're going to have a hard time arguing in court that he's a non-biased opinion, right? So what we generally say is, if your IT provider can do the rebuild, not damage the evidence, make sure that we have everything we need in case of liability and so on, we're happy to continue doing it. Let's just bring in another party who's going to do the forensics along the way. Because there's always the rebuild and then there's always the forensics. And then apprehension around payment of claims. Man, I think that's every aspect of the insurance world. Like, put your hand up if you don't think your auto insurer pays enough. Exactly. Like, everyone's hand should be going up. So the thing with not paying claims, I think that comes out of maybe a misunderstanding around what cyber insurance is meant to do. Like, it's meant to put you back in the exact same spot you were before. But a lot of people look at it as a way of improving their systems, right? It's like, if you have an on-premise system and you want to move to the cloud, insurers will pay to move you to the cloud if it costs the same as restoring you to the on-premise system. But I have a client now who says, we built this software back in the 90s and the programmer hard-coded the administrative password into the code, which was a very much 80s and 90s thing to do, right? That's how I got into my first Nortel network. Anyways, but the point is nowadays they said, well, we want to update and change our software, so we're going to claim all the rebuilding of that software under the policy. And we're saying, well, maybe that's not the best reason for to put you in a better back to the same position you were prior. So I think it's just around a misunderstanding around in communication on the part of the claims person at the beginning of the claim to really understand what it's there to do and solve.
Hilary, so the study has shown that there are some organizations who have opted out of insurance, decided it's not for them, but also say that a catastrophic incident would unsurprisingly change their mind. So how real is this threat, and what types of protection does cyber insurance offer for those who are not convinced and maybe waiting for the worst to happen before considering it?
Yeah, catastrophic risk. That's, and I'm looking at Avi in the audience. That's a subject, frankly, that could have an hour-long discussion, but I'll try to be concise. So what we have, when we think about catastrophic risk, we think about two perspectives, one from the insurer and then one from the client. I'll start with the insurer. So when an insurance company is thinking, or the insurance market in general, is thinking about catastrophic risk and the exposure to that, what they're concerned about is aggregation exposure. So that comes from the idea that one single event could impact multiple organizations within their portfolio. That could be hundreds, it could be thousands. We saw that with the solar industry. The idea of aggregation with a systemic event could happen. And that's really what they're concerned about. So there's a lot of discussion around that, and I'll put that to the side. But from the perspective of the study, the TELUS study, the way that I interpreted the question and the response is from the client or the organization's perspective. So if I'm an organization, what is $10 million, $100 million? Depends on the type of company and the size of company, but essentially, when we're thinking about that, we really need to kind of go back to understanding, those key basics of insurance and cyber preparedness. And
If you think about it a little bit more, it's really understandable if you're having trouble getting buy-in from leadership or from budget to pursue it.
recommend organizations prove the value of like cyber insurance without waiting for the catastrophic incident.
Well, I think no budget is ever as good for security until after an incident. But yeah, I mean, I think Hilary talked about having a like ROI calculator to help their clients understand the difference. And I think having discussions around it's not just monetary. There's like, brand loss. There could be loss if you are trying to get something to market ahead of your competitors and now you've lost that advantage. So there's lots of different ways to look at how an incident's going to impact other than just monetary. I do think that probably in relation to a huge spike when premiums went up, I do see especially sort of the mid-market customers looking at, okay, well, if I pay this premium, but I could do all of this. So I think that's where I'm sort of seeing more of the discussion. It's not devaluing insurance. And I think the study showed that those that had incidents felt very supported by their insurance companies. I think it's just a matter of like everybody's feeling really tight on budget. And so I could get these security controls in place and maybe a false sense, but maybe a sense of feeling like, okay, I've taken care of trying to mitigate the risk and putting off, a potential breach. But yeah, I do think that it's just budgets in general, I think, are tight. And I think that they're just trying to find the best place for their money. And, probably an organization, if they haven't had a breach for a couple of years, they think, well, we're not on anyone's radar. Let's like reinvest this somewhere else because we're having budget cuts. Like, there's so many different factors that go into making those decisions. Yeah. But it didn't seem from this or even the ransomware study, it didn't really seem like the experience of the insurance or devaluing insurance. It was more just about, I have $10. Where am I going to put that $10?
Right. That's understandable.
Yeah.
Hilary, so this is a little bit of maybe an awkward question, given half our panel works in the insurance industry or in and around. But there seems to be a perception, based on the study, not me, that the market is maybe not mature and insurers are changing their terms all the time. How do you talk about this with your potential clients and customers?
I think with that question, you first have to kind of unpack or try to understand why they think that. There could be a couple of reasons. One could be from their personal experience, and the other could be from something that they've read in the media or that their peers have experienced. So typically, kind of like to link it back to what Neal was discussing earlier with the rise of the claims and whatnot, if a client had a cyber policy prior to the hard market, which happened in 2021-22, the reality is that, yes, insurers did change terms quite dramatically. And the reason for that was because the policies were very broad before that, and they were doing what they were intended to do. They were covering losses, paying losses. But as we know with insurance, once insurers have losses, they have to reevaluate how that policy is intended to respond, and that's what they did. So some clients experienced, was that me? I have a very magnetic voice, apparently. Some clients experienced, changes to their policy terms and conditions, and other clients may not have because they had better controls in place. Right. So, the answer is yes, but we have to explain to them why that happened and try to help them understand that. The other thing about, the other part of that question about the cyber insurance market not being mature, well, depends what we're comparing it to. If we're comparing it to the property casualty market, then yes, I mean, that's been around for much, much longer. But I will also say that the last number of years, I've seen a lot more data, and I would say it's gone leaps and bounds in terms of the data available and the ability for insurers to underwrite the risk appropriately and understand even that systemic type of loss, where before they frankly didn't really have any idea of how to calculate that. Now they have data to put into their calculations and to rate it effectively. So really that combined with the controls and the technical rate, that's where it needs to be. That's why we're kind of in that more stable spot. Yeah.
Great.
I was going to add to that and say that, one of the issues we have with cyber is because it is so new, right? Like you look at the property market, they're insuring ships going across the ocean, right? Before computers were even on people's minds. Cyber, is what, 30 years old. So what's happened is you've got all these different players coming to the market, and they've all written their own policy, right? Property, everyone got together and wrote one policy, and it's, the wording everyone uses, like define fire. We can all define what fire and water is. It's pretty much written in a policy. The issue with cyber is it's so new that everyone's kind of figuring out what they're going to use in terms. and I kind of jokingly call it a bit of a Starbucks, where some have invented their own words for things like venti and so on and so forth. In Starbucks, we kind of have that in cyber. You know, did a policy comparison. I felt bad for brokers because, you know, we call it social engineering, which is a defined term by the FBI. There's others in the market that call it fund transfer. Others you call it invoice manipulation. It's all the same coverage. You know, there's a little bit of change to it, but for the most part, it's the same coverage, right? We call it privacy breach. Others call it privacy liability. So there's just slight changes and stuff. So I think as the market matures, it's going to see some standardization. But right now, I can understand why clients are looking at the policies and going, this seems a bit, you know, how do I read this and stuff? How do I easily compare it? It's why you go to a broker and say, help me understand all this.
Neal, so many MSPs are offering cyber warranties with their products. What are your thoughts on MSP warranties? And maybe do us all a favor and define an MSP warranty before you answer.
No worries. So MSP warranties, we're seeing this more and more. What's happening is clients are coming to us and saying, my MSP says they're going to give me a warranty, and if something happens, they'll just pay me for all the damages. You know, I always say to clients, that's great, but the warranty generally says that if the MSP fails at doing something, not if your employee fails to do something. And I think the stat from the Verizon report was, or maybe yours, like 67% or something of attacks are caused by human error, right? So that's your employees. So I think the issue sometimes with warranties is it gives people a bit of a false sense of security. You know, insurance policies are backed by the, you know, the government effectively has to review all of our stuff. We've got licensing and so on and so forth. It's not always the same. So I think with warranties, clients just, I recommend to clients to take the warranty to their broker and say, where are the gaps and holes? Maybe I can save on insurance, but let me just insure for the gaps and the holes. I noticed they said 5 minutes, so I just want to make sure you're aware.
Okay, so 5 minutes. So we'll open it to questions now. If you do have questions, I think, yeah, raise your hand and the mic will pass to you. While that's happening, I'll share. Can you advance the slide, Kim?
Maybe
We're
I
also
can.
running a contest. So I want to share a little bit about that. So we're running a contest. So if you scan the QR code, you can sign up to receive your copy of the TELUS Canadian Cyber Insurance Study when it is published. You'll be entered to win a one-on-one personalized executive presentation coaching session. So yeah, by an organization called Save It Like Sully. So sign up, scan the QR code, and you'll be entered to win, and we'll share who the winner is. I think at the end of the day, or we'll contact you. We'll let you know. So yeah, if there are any questions, maybe raise your hands, and we'll take it away.
Hi.
Oh, there's a mic.
Thank you. So I was wondering, I know you mentioned like the questionnaire. Is that kind of basically like the underwriting for cyber insurance? And what kind of factors do they use to determine the risk from the insurer's side?
So yeah, you're correct. The questionnaire is basically the application for to place cyber insurance. So it contains a lot of very specific questions, specifically around ransomware protections and the controls that are in place to protect organizations from that. And those items are some of the key items that are used to underwrite. Additionally, insurers will look at the industry class of organization and the size of the organization, as well as record count numbers as well.
Yeah, I just add, like, they heavily look at personally identifiable information, first name, last name, address, social insurance number, you can say date of birth of the, like, each of those is like one record. They'll look at how many of those records you have, how many health records you have, because if you have a breach, it's how many people I got to notify, provide credit monitoring to, and potentially are going to sue me as a result. So it's a huge, like, that's a big thing there. And then also the controls to know what you as an organization. And then the last part is around supply chain, right? So I've had clients who make widgets. The supply chain shuts down if they're not making those widgets. So what is their liability and so on there?
I see. Yeah, interesting to like quantify like the reputational risk. Are there any third-party entities, like for example, in life insurance, you have to do medical underwriting, and sometimes you have to have the doctor like verify. Is there some sort of other entity that does a similar kind of verification?
I'll just jump in and say, I think Avi and I are going to talk about later on about the application process. There are, for the larger risks, you can definitely have companies do pen testing and things like that in order to verify. That's generally for the larger one, because you say to an SME, you know, do pen testing for $5,000, they're going to say my policy costs $1,500. No way. So you got to kind of balance too.
Okay, cool. And sorry, one quick one before I take up too much time. If you are new to the insurance broker industry and want to get into cyber insurance brokering, what advice do you have?
I would say you can start as yeah, just basically start apply for a job. So basically, insurance brokerage houses. That's really descriptive. Sorry, that helps. So typically, brokerages do multiple lines of coverage. So if once you get your foot in the door, then you can say which avenue of coverage you're interested in. But most of the times, you'd have to get the job at the brokerage first, and then decide on your avenue of specialty.
I see. And does that
Yeah.
fall under like a property like kind of insurance? Like what type of certification do you need for that?
Oh, so you would
involved?
have to get an insurance brokerage license. So in Toronto, it's the REBO license. So.
Oh, okay. Okay, great. Thank you so much.
Any other questions?
Hi, Rocky Singh with Third Rock Consulting. We work in the defense space, and there's a big cybersecurity push coming down for the mandatory cybersecurity for all the vendors. What is the appetite in the insurance industry to give increasing discounts for increasing CMMC maturity levels? So I guess to your point of pen testing, this would be mandatory from the government. How would that work to your in your world?
I would say in terms of being able to quantify discounts that are given for good controls, it is pretty difficult. And no offense to insurance companies, but they don't really share that information readily. So, but what I would say is you certainly see what we see more often as a result of better controls and better posture. We see more ability to have competition. So from that perspective, then you can have a definite impact on your overall premium.
Yeah, I'd say it's like a secret sauce. So we take in all this information, like industry class, number records, all your different controls. We look and see if you had any previous losses. Is your name on the internet for previous data, so on and so forth. We take in all that stuff, and then say the pen test, that would just be like something else in our algorithm. So the problem is with the discount is I can take that out, but it doesn't necessarily quantify to be the exact same. Whereas I put that in, that matched with 2 or 3 others signals my thing to maybe give a discount or not give a discount, so on. So there's a bunch of factors. So it's hard in insurance to say we get 20% off if you do this, right? Yeah, but one thing like we are doing is we are working on that because clients are saying, well, I want to invest in managed detection and response, which we love, but I don't know how much it's going to save me on insurance. And so we're actually in the process, don't want to make this about me, but other insurers are doing the same thing, where it's about showing the discount or the improvement you're getting, because we want clients to spend money on their security controls, not just insurance. Insurance isn't there to be a loss transfer technique. It's there to be part of a good ecosystem of several things to make you secure.
I think we're running out of time, unfortunately. Oh, one question, just slide in.
It's perhaps more on the darker side of the story. In insurance policies, normally act of war is typically an exclusion. In cyber policies, it's very hard to say that if it was a state actor behind it or not, and how would you see the claims would be impacted by this double-sided coin of exclusion and act of war?
Okay, all recording devices are away. But no, normally I would say I'm gonna ride the fine line here. Lloyd's of London, effectively, who's pretty much taking the lead on this, has put out a wording that. Thank you. You're playing a recording device. Has put out a wording that effectively says, cyber warfare. We're going to exclude cyber warfare, but it puts the onus on the insurer to prove that it's one party having an act of war against another party. And I forget if it says declared, but it's a high enough benchmark that it hasn't been an issue at this point, and I don't foresee it being an issue because we have state actors that we think are associated with a country, but we can't say for sure that person's acting under the authority of, I don't want to name a person, but Trudeau. I'm just naming that because it's neutral. But Trudeau is saying he's going to do this, right? You can say, well, some Canadian company or some Canadian group associated with your government did it, but you're never going to have it where you can say that this person did this, and so therefore. So I think it's more about the idea that the war exclusion came out of the fact of you couldn't insure war, you just can't. So I think that's what they're saying. They're saying if 2 countries declare all-out cyber warfare against each other and they launch tons of attacks, fine. But yeah, for state actors doing it and so on and so forth, I don't think it's going to happen. And do I think 2 countries are just going to go nuts at each other? No. The best part that's saving us all, and this is my own opinion, is most of us use Windows. And so if you launched a malware or virus that attacked Windows, it'd be like attacking everybody in the world except for Mac users. So it'd take down so many people that I just don't think it would go the way you want, right? It'd be hard to control. So,
And just
Thank you.
one
Go ahead.
final note is that war is an excluded thing in all insurance policies. So it's not as though, I think it's got a lot of that and maybe misinformed press just because of a few well-known events that had happened. So.
Okay. Well, I think that's all the time we have. Thank you for joining us. Thank you, Neal, Kim, Neal, and Hilary. And have a great day.